Okay, happy Thursday, leap year day, everybody. Hope everybody's having a good day. Obviously, the Russell trying to sort of break out of this little base today. It's squatting now, but that would be, even potentially normal. Just trying to complete, the right-hand side. We've been talking, just real quick about how the Russells and mid and small caps have put in sort of these larger bases and seeing if we can get some follow through here. It may need to build out a bit more, but and obviously with the position in the IWM we took the other day. So far, looks like coming in, potentially on schedule. Let's get to some questions. First one was about this ETF XLC. Said that, let's see, like the RPR at what caught my attention, tight price action. I took a full position with a stop at the low on Tuesday, which would be, I guess, right here. So you're sort of, looks like you're playing, right near the danger point. Going to stop yourself out if we take out that low. Risking about 1.3%. It's liquid, trades over 6 minutes on the weekly chart. Please share your thoughts on the trade, I guess. Okay. This is from Jean or Jean. Not sure how to pronounce your name. Look, here's what I don't like. This is short. This is really short right here. Listen, like we talked about, and if you read the note from the other day, the tactics work on anything. So you can trade ETFs or, we talked about the IWM, things like, even maybe other asset classes at times as well. But, this in a vacuum doesn't look, that constructive. Now, what I do like is that you decided I'm just going to try and catch it here. And if it goes, I'm in and I'm really tight. So you're only taking, 1.3% risk. That's very tight, trading right near the danger point. And then, if it breaks into new high ground and something that's short, that's how I would play it. Meaning it's sort of a, do or die. It's going to go right now, or I'm stepping aside for a really tight loss. And, 2.5%, 3%, you're at a 2-to-1. So I like the risk reward. I don't love the technical setup. I don't know, Brandon.
Yeah, it just looks like a low probability trade to me. So, what we try to do here is find, aces, right? And this to me, I don't know, this is, maybe a pair of threes, just because it's just, you're so tight on it. It hasn't had the time to work on a really constructive right side. So that's what I'd say. Yeah, I like what you're doing as well. And if you have a tight, a good plan with a tight risk, then, to your point, Mark, you should be at a, maybe a 2-to-1 trade pretty quickly if it goes in your favor. But yeah, I just think it's a low probability trade.
Let's see. Eric's saying he likes logic, and ever since I follow Mark and read related books, whenever I see supply and demand waiting for supply to drive to quiet down, it makes sense to me. But often I question, where does the supply come from when breaking out? Maybe I look at it too literally, but would I be right in saying supplies dry up, it just means a certain price range drying up as to really no supply. So just no willing seller anymore at the pivot price, but there could be when the price moves up more. Well, sure. I'm not really don't know how to understand. There's always buyers and sellers in the market. You hear people, say all the time, well, why'd the market go up? Well, more buyers and sellers. That's the correct answer, though. It's just an auction market. Now, and this is why, when stocks really quiet down, you can see sometimes, very little, especially if they're less liquid names, very little trading actually takes place. So if you want to buy the name, you're going to have to pay up and push prices higher. Now, who's selling it there? Well, there's lots of, folks who are either owned it lower. Maybe it's been going sideways for a while. Someone's happy to get out at even. That's not nearly as important as the ability to measure, the line of least resistance and when it's moving in your favor. And this is why we're stacking all these things on top of each other. And if you've noticed over the last 12 to 16 weeks, 3 or 4 months now, institutions are willing to pay up. That was not the case. And there are periods where, breakouts they don't seem like they work. And then all of a sudden, they're flying with, no issues. Well, why? Because there's more demand and less supply. It's the same thing all the time. I don't know, Brandon, when you think about, where does the supply come from? I don't necessarily even think about that question because there's always a potential seller, but
Yeah, for me, I wouldn't get too hung up on that. It's more or less like there's just more buyers than sellers. Is really how I would think about it, instead of like where's the supply of shares coming from. It's just the fact that there's more buyers overwhelming than there are sellers willing to sell, and that's what moves prices higher.
Good. Yeah, great point. John's saying, how patient should we be with positions that are not performing when other breakout opportunities are showing up? How do you decide when to sell positions to open up room for new breakouts? Example positions maybe that are plus or minus 3% after a week or two and appear to be doing a little wrong or right. Currently, I feel the market isn't ripping enough to jump around successfully, but I'm not sure. If you had been fully invested and then saw the IBIT setup, would you have quickly closed positions to open up room for it? Okay, a few different questions here. I do like that you used an example. As a general rule, especially if you're new, I would not advise doing a lot of jockeying. Mainly because what winds up often happening is you buy a breakout or you buy a stock perfectly. It doesn't do anything wrong, but then you're sort of chasing the next piece of eye candy, if you will, or something that's moving rather than sticking with the trade that's working out. Take like something like an ERJ, for example. Stock breaks out nicely, not doing anything wrong. Well, unless you're a really short-term trader, taking profits here, if you took, a mid-single digit stop, doesn't make a lot of mathematical sense, but I just want to buy the next, breakout that's moving. Now, what you're describing is not doing anything wrong, not doing anything right. Well, this stock could easily just continue to build out here and only be at, mid-single digit gains and be acting just fine. So the stock then does this and someone goes, I'll just sell it when it's acting normal and buy something else that's on the move. Unless you're a really short-term trader and really experienced, I wouldn't advise that, at least right away. Now, let's say, hypothetically speaking, though, you've got a stock that's going. If you did do that, I would always have a plan to buy the name you're in back, or ask yourself, why isn't it acting well? If I'm holding a loss, maybe the stock's down 1-2%, and I've got another breakout that's really tight, I will either tighten up on the one that we own that's down and saying maybe I won't take the full stop on it, or I'll step aside with a plan to get back in lieu of buying another name. Now that's hypothetical. So you, jumping to the next question, you asked about if you were fully invested and you saw the IBIT setup, would you have closed a position to open up room for it? If I didn't have more room, I might. I would look then to say either where can I trim, assuming you don't have any more buying power. If you're comfortable going on margin and things are working, I would just buy it. I wouldn't sell. I would just continue to get more aggressive and go on margin at that point. Or if you want to then use some form of forced displacement where you can say, listen, I want to buy the IBIT, then you either have to take profits on something, and this is where you just sort of make that portfolio management decision based and do it stock by stock. So either I would look at the stock that's either most extended at a multiple of your risk, because if you want to stay fully invested, you should have things that are working. And that at that point, you just, trim the name that's either the most extended and most likely, for a pullback. Kevin's asking, is the action in GII yesterday ominous? I think this could be a shakeout and the rally to the 50 is promising. What are your thoughts? Well, listen, this was, obviously not ideal. You got a decent close above the 50. And given where you closed, this is clearly, you're correct, some form of a shakeout. And listen, you sort of wedged up a little bit here, and then, pulled in sharply. I think yesterday's low is probably a key low, where if this is still under accumulation, you want to see this hold, because we did get some buying coming in. But not ideal, but you got a good close. So I would say this is one to keep, an eye on. Where do we go from here? If it tightened up again, though, up near this level, this would be an add, because you sort of had the shakeout and you may have to, you have to put in more of a right-hand side. You can see this base is not really complete here, so you do have sort of this abbreviated right-hand side. And this may have just, knocked out some weak hands. If you were able to sit through it, I'd try and give it the benefit of the doubt. Bob is saying DENTH last September had a 1-to-16 reverse split, stock changing from a penny to 11. When considering entering a stock, should that have any impact on your thinking? Yeah, this DNTH is one we actually sort of stayed away from because we weren't 100% clear, even in terms of what this run was really about, and to the point, yeah, you made, Bob. A reverse split isn't a reason not to potentially buy the name, because that's not gonna cause a double in the stock. Where, look, this stock, and we talked about this, this was potentially viable, right here. It's, definitely a little bit lower quality and a little lower liquidity. So spreadier, I would position size, accordingly. And then you add to the fact, what you mentioned. Yeah, I would just, if you're going to play it small. Fahimi's asking about ERJ, where the reversals within the pivot a reason for concern. Well, if it was a reason for, presumably maybe you're talking about this day here, here, or I see, yeah, okay. Well, look, this is pretty tight. So if you sort of measure here, you're mid-single digits in this little range. So these aren't, and see how the volume in here is pretty low. That's very constructive. And you see how when you come out, you get that, we call the 1-2 punch, where volume dries up a little bit. And then in the breakout, you get some volume coming in. That's constructive. And this lines up, sort of, it tightened up. Here's your VCP, 1, 2, and then I drew in the third one. So this is just sort of a classic pivot. To me, the only negatives in this were, at the time, you had a minor kind of, the 50 was trending just a little bit down, but you can see, even now in a few more days, this is going to pick right back up, likely to the long side. And, you were contending, with the reversal here. So buying it a little bit below that wouldn't surprise me if it didn't, maybe stall out in here. So far, it's gotten through that 1880, 1885 area. It may need to put in some type of a handle, but it may just go. That's why you start the position and go from there. Also explain the reason the stop is very tight on PJT. Well, that's where the trade sours. Just double checking where our current stop is on this one, Brandon. But listen, normally the stop is based upon where we think either, the maximum allowable risk in terms of mid-single digits. But if that's where the chart is starting to sour, or we're expecting the name to go, the tighter you can, potentially be.
Yeah, that's what I was just going to add is, this is just a name where, we're expecting it to just go here. So this is where you want to have a tight stop, because if it doesn't, then, either it needs more time, and who knows, it'll get give us another chance to get back on board.
Arun is asking about MANH. If yesterday was a good buy price coming out of 253 range. And look, this is one, we've actually had this on. I remember when we first put this on, but had it on focus. It didn't really get tight. See, this would have been a little bit better maybe if it drifted back. But listen, could you play it there? Yeah, I think you could. It's sort of wedging up a little bit. Even measuring this whole,
it's about 5%. Yeah.
Yeah, this isn't a huge wedging, but there might be a price to pay in terms of it may pull back and set a little bit more clear of a right-hand side. If I was going to, start a position there yesterday, maybe take a half position or something like that, in anticipation that it may need to build out more. And, get a little bit of reversal coming into this high. That's kind of what I would expect. I would expect this to maybe, reverse here, and then either you get some type of a pullback buy or some type of a right-hand side where you can potentially add to it. It's a little bit short as well. But yeah, I think you could have started it, and there was a reason why it was on focus. Renee's asking, could you explain the buy in EYPT? Yeah, sure. This is just trying to get back on board. What was a power play here, we bought the name, sort of just got, we're shaking out on this day, I believe, Brandon, on the remaining shares. And then just double checking here.
Looks like Mark's selling HUBB, by the way.
Okay, taking profit on Hub. We'll get to that in a second. And this is, just sort of your pullback buy on a really strong name. And you notice he started with a smaller position, and expecting, that it may build out a little bit more. So it's just trying to get back on board what looks like, what was a normal, just kind of a shakeout in a really strong name. And, again, using the tactics to sort of waiting for the trade to turn back up in your favor and then initiating your position once prices are moving back in your direction. And then you measure, and it's mid-single digits. So the risk is acceptable. Yeah, let's take a quick look at it. Yeah, just, again, stock, you go through really natural reaction here, back in a new high ground. You're at a multiple of your risk. This is where, you take profits or partial profits, and we'll use that strength for selling, locking in that alpha move and, on to the next one. This is also a stock that's, it came out of this really nice base, and it has decent fundamentals, so it's not my favorite group, if you will, but acting really well. So definitely something too, if you want to, play this for a bigger move, you financed, your risk at this point, another candidate to potentially do that. Okay, there's another question on MANH already. Another question on that, already covered it. Is Ollie acting normal? Kevin. Absolutely. This is just setting a right-hand side. So, and, we'd said, this is a name, coming through here that, and we got, I think it was a question where Mark was saying, look, was it perfect? No, but he wanted to own the name, knows a decent amount about the fundamentals, and expecting that it may build out a little bit more. Well, that's what it's doing. I like that it's catching some support here today. And if this name, you get a really good close, or even right here, you could potentially add to the name, coming through a situation like this on Friday, tomorrow, or you build out more, you just put in more of a handle. I'd be looking, for the name it might just set a whole another pivot up here, where you can potentially, it's not the, and then you bump the position again, or you buy it initially if you don't own it. Remember, sometimes the best stock to buy is the one you already own, but each subsequent buy needs to stand on its own. So ask yourself, if I don't own the name, like as I look at Ollie's, if this stock even closed here and I was looking to put on more exposure, I might start a position tomorrow, even though I don't own the name yet. Why? Because this is a normal pullback. You caught some support after, on the third lower low, the right side, and then as it builds out, I might potentially add to the name. So I think it's acting completely normal. Let's see. Nicholas is asking about Datadog. Bought a half position today. What's your opinion? Presumably you're buying it right through this little pivot. Yeah, it's not my favorite. But I see what you're trying to do. I don't love, this volatility here. You did sort of undercut this and then come back up. It's also a 90 relative strength. The fundamentals do look like they're really strong and trending in the right direction. You got through the earnings. So could you play this here? Yeah, but it's sloppy. And see how you got this pullback here, decent volume, this volatility, and then subsequent. It looks a little messy to me. It doesn't have the look at all on the right-hand side. But I do like that, you're trying to play it really tight. So maybe it came out today. If I was going to play this, I'd probably cut at least half the position at these lows. And then this low to me is really key. Plus you'd be taking out the 50 at that point too. So measuring, 132 down to even 123, it's acceptable, but again, I don't love it. Constantine, thanks for the nice words, saying he's a fan of the Mark and Brandon sessions. Do you use MarketSmith weekly industry group ranking in your weekly analysis, or do you use it as a nice to have reference, or do you go group first and then look at the stocks? Brandon, you want to cover that one?
Yeah. So Constantine, we do stocks first. And then occasionally I'll look at the group rank just to see, what it's in or where it's been. Obviously we want group rank to be moving in the right direction as far as getting stronger. But as far as, will we avoid a stock because it's in the lower end of the group rank? No, not necessarily. It's more has to do with how the stock looks and the relative strength on the actual individual stock.
Yeah, and I'll just add to that, briefly, that the only thing I tend to, I look here. You can see my cursor.
Same. That's exactly what I was
I
talking
just want to
about.
see what do these guys do rather than the number. I'm not going to see the 190th ranked group or whatever generally, because it's going to have low RS and those type of things. So usually, on average, the stocks we're trafficking in, because of, we use the stage 2 criteria and the Minervini trend template and those type of things, we're not seeing the laggard type groups. I just tend to take a quick peek if it's a name I'm not familiar with, like who are these guys, what do they do, and then I look here, and then I tend to cross. Well, I shouldn't say we don't play favorites, but certainly we're going to prefer that the names where the biggest winners in history come from, at least in terms of those groups and areas. We talk about that in the Master Trader program. You can read about that in Mark's books. But consumer retail, technology, leisure, entertainment, biomedical, those would tend to be, say, favored over other cyclicals or that type of thing. Question on BAM. Can you rate my buy today? Bought it at 40.75, stop loss at 40.06. So it looks like you're just playing this right through, sort of using this bar as your trigger. Bought as it came through the high and are stopping out at the low. Well, it's tight. And I like that, you're sort of using a little bit of imagination, expecting there to be, to catch some support here. Here's the thing. I don't love this close. This is sort of mid-range. You did get a little bit of a pickup in volume versus the last couple days, where I would prefer a play like this if the close was, maybe near the end, high of the range, or the stock opened, down but closed on the dead high where there was some signs of accumulation. Using this type of tactics, look, it's really tight. You're going to get stopped out more often. So normally you have to define yourself. Are you comfortable with that? Your win rate on plays like this is going to be a little bit lower on average, but then your risk to reward is higher. You're taking a 70-cent stop, so 4 or 5%, and you're at a 3-to-1. So look, this is where it should catch support. You do the 50 a little bit below this, and if I was more of a swing trader, I'd be starting a position today, probably letting these lows shake out, and maybe even let the 50 shake out a little bit with a little bit of a smaller position. Then seeing, do we get more of a right hand side, and can I potentially add to the name?
Hey guys, real quick, how you doing?
Hey, Mark.
Great, Mark. How are you?
Hey, just wanted to tell you a few things, everyone. So I just got off with the programmers. We're having a couple new things added to the screening, and when you have open positions, and then I believe also focus list, it'll show up when they're new. So if there's something newly added, it will show new in the comment section. So, and I think we're going to try to add that to the screens too. All this should happen within the next couple days. The screens might take a week, but also on the screens. So then you'll know, maybe like in the relative strength screen or the momentum screens, you could see what actually hit those screens that's brand new. But certainly on the focus list and the open positions, when the new positions are put on there, even real time throughout the day, it will say new. So you'll see, and you can delineate between something that's already on there and something that was just added. That's in charting. The other thing too is we just recently redid the app. I know there was some issues with I think with the Android, but we not only redid it to be able to deal with the reprogramming for Android, but the whole app, most of the functionality that's on the entire platform is now going to be on the app minus the charting. I think almost everything else is going to be on the app, but there's a whole new app, completely new app, and that's going to be out within the next week or two also. So that's also happening, and we're making real good progress on the grading tool. You're going to have the trade grader, which will be able to grade the trades, put them into a digital model book, and then have a report card generated that will tell you sort of your tendencies, what you're doing wrong, what you're doing right. And then ultimately, this is a little bit down the road, but AI will read it and will give you recommendations on how to improve what you're doing based on that report card. But that trade grader, we're making really good progress, and that should also be available probably, I would say, the next month or so. Yeah, we're trying to get it as fast as possible. So a lot of things happening. We're doing a lot. And just wanted to give you an update on that. And by the way, with this stock here, there's probably better names in the space. I think a general rule of thumb that I'm seeing is we're starting to see now the laggards starting to set up. You know, like even like the PJT and some of these names that I've even recently added, we're definitely going to the laggards now, and they can work and they can play catch up. But a lot of the leaders have already established themselves, taken off. And as Mark just said, sometimes the best stock you can buy is the one you already own. And sometimes that's in a stock that has already made a big move, and maybe you're even out of it, and then it resets, and now it's on another base. It's on a second or third base. So don't just always look for new ideas and start going down the trough and the lower RS names when you may already have some names that are well-established leaders that are in strong uptrends, have a lot of momentum. And going back to I just mentioned this on IBD Live yesterday. Going back to Yahoo in 1997, I bought it right off the IPO, but then I traded it like 8 more times, and I made a double several times, 30% a few times, 60% one time, and it was all said and done. Yahoo went up 8,000%. I made hundreds and hundreds of percent on it, but I traded it in and out a lot of times from different bases. So keep that in mind. I'll let you guys get back. All right.
Thanks, Mark.
Quick update. All right.
Yeah, obviously really exciting stuff, guys, on the platform, as we've been saying. So continuing to just, build out and improve a lot of the tools for everybody. It's as I've been saying for a while, only really, really good and exciting things coming. And as someone who's been around a long time, the quality of the platform is only continuing to improve. So back to questions real quick. Scott is saying, have we done any studies on expectancies of earnings releases during, say, different stem readings, like orange versus green or, red? We seem to be selling off positions, reducing risk, only to have the stocks blast off. Recently, FRPT, Toll, Domino's. I know there are negative reactions on some as well. We're going to have some Google, but isn't there a positive expectancy in good conditions? Some you've held because of the profit cushion, but I'm wondering, even with the no cushion trades, if there's a positive expectancy over many earnings cycles. We haven't done any, at least Brandon and I haven't, and I've never heard Mark reference specific studies say that, when our models are on certain readings, our earnings response is better. And however, are you correct in that all things being equal, will they be better in easier dollar environments? Of course. That's because stocks are, under accumulation, versus, distribution. Institutions are net buyers. And the bad earnings responses in bad environments tend to be, the blowups are even bigger. But that's not a reason to, sorry, your Mark sending me a message. So tell him, Mark is saying, tell him to watch the video clip I just posted on my Twitter from yesterday's IBD Live. I'm not sure if that was just for you, Scott, or for everybody, but as a general rule, I think you should watch all the videos Mark's putting out. But I don't know, Brandon, the biggest thing though is the cushion is everything. I would never hold a position with no cushion just because, that I'm down on into earnings, just because, we're in a decent environment. That why increase the risk? So remember, it's trade by trade, managing the risk in real time. We just don't know. Listen, we had an internal discussion about FRPT on Friday, and I was hoping, we could get out the gate a little bit more. Even I think it was Mark or Bob who said, that thing has earnings on Monday, right? And I said, yeah, but if we can break out here, maybe we can hold a piece. Well, it wasn't that much of a breakout. Now, you could easily say in hindsight, I should have just held it. Well, no. What if it opened at 75? or 60. I mean, we've seen, we've seen some big gap downs, and we will in every earnings season. So look, all things being equal, you're going to have more cushions though in easy dollar environments, which will allow you to hold. And yes, the responses on average be better. That would be my answer. I don't know, Brandon, you want to add some color?
Well, yeah, it's just this idea of like, listen, our job is to manage the risk first. So when you don't have a cushion, or even when you do have a cushion and a stock gets, annihilated on earnings, which again is we have no idea what the response is going to be. I think Snow is a good example. PANWs are a good example from last week. Like these stocks that have acted really well sometimes can get just annihilated. So tell me, what would you rather have? Would you rather sidestep something like this if you didn't have a cushion? I mean, even if you did have a cushion, you're underwater now, depending on where you bought, or like a PNW, right? So, would you rather be stuck in something like that with the possibility of maybe catching an FRPT? Or would you rather just be like, you know what, I'm going to, manage the risk and just be like, if I don't have a cushion, I don't want to take the added risk of holding through earnings. Because again, losses work geometrically against you. And especially when they start to get big like this. So it's always, again, just the pounding the table of like, you guys always got to be thinking defense first.
Yeah,
The
defense wins
offense
championships.
Yeah, the offense will take care of itself down the road.
Offense sells tickets. That's right. But
That's right.
Defense wins titles. Gary is saying he bought a half position of SPHR yesterday when it broke above the high of Tuesday. Added half today when it opened above the high of 222. To make sure I understood. Yesterday broke above the high of Tuesday. Okay, so you were sort of
cheating a little bit.
Cheating on this one a little bit. Yeah, I don't love that buy, mainly because there was no evidence of support on the day prior. And why not just wait for this? Now, it gapped today, so you wouldn't know that ahead of time. And look, this is a little bit short here on the right-hand side. Is it, buyable? It's tight enough, absolutely. And it's on our focus, for a reason. Today, I would not have chased this gap. Well, let me just measure here. Let's say you caught it right on the open. I take that back. This was a small enough gap where things were going well. I think you could buy a position, or I would start a position there. I wouldn't just plow in. Now look, you're being aggressive, so you bought it as it turned up, through Tuesday's high. I think it's okay. Again, I don't love chasing the gap, but it's working. And it's trying to come out of this. This is a nice cup and handle here. So all in all, I would say, look, I think you did a reasonable job on this, trying to get on board. A little bit of a stunted right hand side, but sometimes that's all you get. So, Patrick's asking, could you explain a bit of your strategy on IBIT? Do you follow the platform sells? Are you holding a bigger portion? What's your approximate time horizon for your long-term investment? Second part for the technical analysis, do you follow Bitcoin or IBIT? BTC trades 7 days a week, offers somewhat different view. No, it doesn't. Well, here's the thing. Look, I've been like I talked about before, my plan was, or our plan was, see if we can finance a bigger, longer hold. We didn't even add the other day. Now, were we a dummy for not adding? No, because we already had as big a position as we were comfortable. We talked about this Monday. In hindsight, I could say, oh, I should have added. I didn't know it was going to do this in another 3 days. It's definitely extended at this point. So you have to ask yourself what you're comfortable with. I think this is very early, and I caught the tiger by the tail. So we're going to give this at least a portion of it the benefit of the doubt. Now, we de-risked into this move in terms of our overweight position. Now, as far as technical analysis, it's the same. We're not. I look at before the IBIT came out, there weren't a lot of good vehicles. This is one of the reasons I tend to be bullish, because there are just a whole bunch of new potential buyers now. And I tweeted the other day, the main reason, give me all the use cases for Bitcoin, a lot of which I tend to believe in and that kind of stuff. The big thing right now, though, is institutional flows. You finally have an avenue for people to buy this. For a long time, people couldn't really buy it. And that's a whole, won't get into all that, but as Mark had said, Bitcoin kind of operates maybe like a new gold. for sort of a younger generation. Technology meets store of value. Look, the big thing is I don't care what it is. When I see a chart pattern like this, I'm potentially interested. Then you add, fundamentals and something that I understand. I'm willing to get potentially either more aggressive initially with the hopes of trying to play something for a bigger move. So that's really the thought process. I don't know, Brandon, you want to?
No, I think you covered it pretty well. I mean, there's not much to add there.
Let's see. Stop. We talked about EYPT. I thought we shouldn't hesitate to sell when a stock hits the stop. So I'm wondering, why is it still on the platform? I think you're referring to Alicia. It got stopped out and then it got bought back.
Right.
So the name was on the last piece was stopped here. Then it was repurchased here. And this is precisely, and we do this all the time, not just on the platform. We do this on our own account. You get knocked out of a name, you look for a way to get back on board. Here's the next. Here's your low risk entry to re-add coming through this pullback buy. Janine's saying, could you help me understand the recent price action in Vera? Bought the name on 2.9. When it was on focus, I trimmed on the same day to finance risk, moved my stop several times now. I have it at 44.30, just under the recent action. The stock seems volatile. We're stuck in a range, but only for the last week. Trying to be patient. The model alert backstop big move notes, big squat, big reversal last week. I'm having trouble determining if the stock's acting normal. Backstop big move would not be how I would use. If you bought the stock here, and this was short, you said you de-risked into this move, which is great. Now you've sort of financed your stop. At this point, I would definitely move my stop to break even, because coming below and undercutting is going to require an entirely new base. This is sort of that power play that you cheated on. You got the double. You didn't really get long enough here for this technically to be a power play. Just a really strong stock that you sort of bought the first pause, or natural reaction, if you will, into new high ground. So this is sort of a creative way to play a really strong name. And given how, if you were really tight, I would have probably sold into this move. You had your first move, pause, second move into new high ground. This at some point, given this strength, I mean, the stock has gone from 14 to 50 in a very short period of time, is going to need to build a new base. Still acting strong though. So if you want my read on the price action, I would say this would be very normal for the stock to pull even back to 30, given the run we've had. Dan's saying, do you clear up your alerts every week so they don't build up? I tend to leave them on and they'd be popping up even for those that are no longer viable. May I? Well, that's the first question. Brandon, you want to cover the alerts?
Yeah, we definitely leave them. So, and the reason for that is exactly what you said. When something goes off and we set it, we always bring it back up to see if, what's transpired. Maybe there's another, maybe it did set up another potential pivot that we could buy from, or maybe we just want to watch it and see how it handles that area. So definitely don't clear them out.
Question number 2, asking, percentage we are invested. If we're near 100% invested. If you count, sort of the IBIT, yes. And we did add a decent position in the IWM as well this week. So yeah, we're close to 100% invested. And then Ollie's we already talked about. If we buy it again, it bounces off this pivot. Yeah, I think get a decent close. You could potentially start a position, maybe even bump it. CJ is saying, hi, Mark, recently had 2 trades. I made 2 to 3 R, but after I sold them, they both continued to rally to say 4 to 5 R. I was wondering whether I choked off the trades too early, or was it just a part of trading, since we only know that in hindsight? Great point. You're absolutely correct. We only know that in hindsight. Like to learn from them better next time. Without looking at the trades, you didn't give us the symbols, or the buy points. Is it just like NVIDIA trade that we had closed in the position of multiples of our risk of NVIDIA, but then continued to go higher? So we just moved on to find the next trade. Yeah. Well, what's the goal, CJ? The goal is to make a multiple of your risk. Why does it matter if the stock went up 4, 5, 20 R? You are going to trade stocks that seem like they go to infinity, and you're going to sell stocks that go to 0. The goal is, can you establish an edge and turn that edge over? And ours comes from low risk entry points, and risk management. So I would argue, just based on what you told me, not looking at the trades themselves, you did nothing wrong. Anybody that takes profits at a multiple of their risk didn't do anything wrong, in my view. Now, if your buy was sloppy and those types of things, you got rewarded. That's one thing. But taking profits at a multiple of your risk is exactly what you want to do. What does it matter if the stock goes higher? This is where a lot of people struggle, because it's sort of like you're playing cards. You fold your hand, but you want to see the next card that comes out of the deck. What does it matter? You already folded. I don't play a lot of cards, but whenever I see somebody doing that, it just tells me that they're probably going to lose in the long run, because they're more interested in being right than they are in making money. NVIDIA could go to 10 million. We pulled money out of it. That's the goal. I don't know, Brandon. I don't at the risk of going,
on a tangent.
Minervini tangent here. You calm me down.
No, you're making very, very good points. And CJ, if you want to try to continue to expand, your average win, if you will, to a larger number, well, go back and look, take a objective approach to it and say, okay, well, the bases I was buying from, were they the first stage? Was it the first base coming out of a stage one? And then how many times did you sit through a pullback? Because I know, the one thing I'll add is, when we went back and looked at some of our previous early trades, when we were buying something coming out of a primary base, we realized we sold it probably too soon. That was the only time we would deem that, is like, okay, well, this had earnings. It was coming out of a larger base. We held through one or two reactions. We probably should have held through more. But to Mark's point, at 2 to 3 hours, you're making really good money. So you should try to turn that over more. And, at some point, sure, again, go back and look. Were these stocks that were just emerging from a nice long base? That would be the only thing I would add. Because then you could see, like, well, all right, how many natural reactions do I want to hold through? Was it doing anything wrong? How extended did it get? That's what I would add to it. Just trying to improve incrementally.
Absolutely. Timothy's saying he bought a half a position in SIG on February 9th at 101. Highlight that, 101.66. With a stop at 96.41. It had an RPR 93. Earnings news wasn't due until mid-March. I took the fact that it went into new high ground only 2 days after the CPI news as a sign of strength. Handle got a bit wider, but was still only 4.5%. I added the position on February 23rd, right here. The handle got a bit wider. Oh, sorry. I considered staggered stop at 102.70, 90, 890, but decided to set my whole stop at 101.50. Just below the 50-day. Was there anything wrong with my plan? At the close of February 27th, Monalert showed 11 confirmations, 3 violations. SIG didn't release any material news yesterday, but it gapped and fell 6.5% the first 5 minutes on only 5,000 shares traded. And I got some slippage. If you find yourself getting stopped out more often at the open when spreads are often wider and prices more volatile, if it sets up again, I may re-enter. Okay. First of all, I think you bought it. I think you bought it right. And I think you used the tactics really well. This was the trade just didn't work out. So does that mean you necessarily made a mistake? No, because the ends don't justify the means. The means were good. It just didn't work out the way you planned. Now, to your point, could you have been maybe a little bit too tight? Yeah, you could have, but I think you used progressive exposure, at least in this position, properly. You sort of used this to say, now I'm going to maybe double up or add to the position. And your original entry sort of at break even. And you, in my opinion, accomplished the goal of increasing your exposure without increasing the risk. Now, you still lost on the trade, but if you do this properly, 100 times out of 100 in decent setups, you will be ahead or miles ahead, in my view. So I would say good job. And look, as far as your point about a little less liquid, or maybe sometimes being shaken out at the open. Yeah, that does happen sometimes, unfortunately. And just like you, I'm often, if it gaps through a stop, I'm taking the next best price. I'm not waiting around. We've talked about that. Now, if it resets, like you said, this entire right side, may completely reset. It's still not, 108 down to 100. This is still mid-single digits. So we may get, another shot at the name. The other thing, nuance I liked that you mentioned was you bought it because it came out right after what was a bad day in the market. And this stock, came through a pivot. That's exactly how something that we like to watch, and it's sort of a nuance that we find important or valuable at times. The general market's having a bad day. What's the first name that, bounces back? Really looks like a tennis ball. Or the subsequent day. Maybe you get a distribution day in the market, but you got a number of stocks that are setting up. I can promise you, after a day like that, a lot of people are much less willing to buy. So a stock that's breaking out is telling you, it's being accumulated, or that's at least it has my attention. Doesn't mean I'm going to buy it, but it's one I'm watching. Already talked about BAM. Just checking something on another screen here. Manowar is saying, hi, Mark and Brandon, bought IoT today. Stop is 32.89. Need your evaluation. Yeah, this is one looking at as well. Let's see, 32.89. So yeah, you're sort of playing it through this little area here with a stop right there. Look, if I was going to play this, this is how I would handle it. Look, you're running into some supply up here. So this is where I would start a position. Is this tight enough? Sure. You do have some good fundamentals too. This is sort of another version of what would be like a bigger primary base. We were looking at this name to see if we could get on board over here. Never really set up. And this is this is really kind of the first base we've had that's sort of viable in the name. It's not perfect though. So yeah, I would be a little bit smaller. I like that you're being tight on it. And now with earnings coming out, in a week, if you can get into a cushion, maybe you can hold in. And if not, you just step aside. I think if it were to tighten up, I'd like to see it tighten up more, into these reversals. There's clearly some supply up here, in the high 36 range. So ideally, that's where you start a position. And then if it stalls out up here, you look to potentially add. See, Robbie's saying, I know we discussed RDNT on Monday, but I'm still unclear why the base is not a good one. I thought it was getting a better understanding of the look and quality of ECP. Only thing I can think of is the actual base begins on 721, not 12. 721. So you're looking all the way over here. If that is the case, I was too myopic not seeing. I probably answered my own question, but I would like to know if you thought my process is correct. Well, the biggest thing for me is first thing, okay, it's 87 RS. Mark just talked about how we're starting to see some of the laggards. This isn't that tight. Where's the tight pivot here? When I look at this and I go, this doesn't have the look to me on the right-hand side. Now it's sort of leaked off. What's Mark doing here?
He's bumping GoDaddy.
Yeah, let's take a look at that here in a second. We'll look at that first because last week we actually missed GoDaddy intraday on this day and had wanted to buy it. Look, here's yep, as it's turning back up here, pulls back on top of, I wouldn't even, on top of sort of this, I wouldn't call this a base. This was sort of the base here. And setting your pullback buy, depending on how this closes, you could potentially even add to your position tomorrow. But yeah, stocks just holding up really, really well. As we've talked about, you look at this whole move, the only pullback we've had less than 10%, and then boom, right back into new high ground, back into new high ground. This is tennis ball action. See how this comes off, and then just a few days, boom, right back into new high ground every time. Here, 2 days back into new high ground. Back to the RDNT example. This is short right here. in terms of if this was sort of the VCP you were looking at, sort of 1-2, you poked your head out here, stock reversed, now is coming back in and sort of taking out, like volatility. It's not widening dramatically on the right hand side, but there's just not a lot of momentum in this name either. Even with as strong as the market's been, it hasn't had that great of a move. And this right hand side just not very tight. You also, you've got a number of, I don't see, to quote David Ryan, it just doesn't have the look. You got a reversal here on decent volume, in a bad close here, and then yesterday you did sort of close mid range. It just needs time. Also asking about HNI in terms of the base. Yeah, this I like much better. See how this just has a much smoother look. You've got a clear 1, 2 right here. This was, viable really on 227, right there. Okay, you're saying you bought some. Yep. I think that's an okay buy. See, Michael's saying, I bet Hardy showed extended 1-year history warning in Monolith when we bumped the position. I expected a sell recommendation. Could you please explain? Well, listen, first of all, this doesn't have a 1-year price history, guys. Well, I mean, we're talking, this is like a 3-week price or whatever, a 1-month price history. So of course it's extended versus itself in that regard. And we talked about this, and Mark mentioned it as well. We might not get another chance to get aggressive because if it's really strong, it's not going to pull back much. So, as you get a short little handle, this was even a bit aggressive for us, but like we already said, we had as much on as we wanted. The stronger the name is, it's not going to give you 5 chances to buy it. It might not even give you 1. That's how it's really being accumulated. And for newer issues, and I would put IBIT in this camp, I wouldn't use the extended versus 1-year historical. Now, this isn't an IPO like a complete new stock, but as far as even for what Monolith is trying to do, that's more beneficial for, a name that has established, a good 1-year price history. Make no mistake though, this stock is extended. Bitcoin is short-term extended. Could it continue to stay extended? Absolutely. And if you've studied the price history of that asset, that's precisely what it does in bull markets. Can you share exposure levels? Already did. You guys, every time I'm going to share exposure levels, I'm going to keep asking or asking to ask yourself, why does it matter? What are your exposure levels and how did you get there? Because if you're thinking I need to own more because Mark Ritchie owns more, you're thinking about it wrong. You want to own more when things in your account are working. There were times, we've had other members that are, knocking the cover off the ball and more invested than we are or less. We're not sitting here going, oh man, we got members who are, outperforming us. That's good. That means there's lots of opportunity in the market. You want to be able to be your own operator. Even if you have an entry point that you really like and a risk plan, and maybe it's not my favorite, I would prefer you have the confidence and discipline to follow your own plan, if that makes sense. And for a lot of you guys, throwing out creative different plans, what do you think about this entry point? I think you're thinking about it, proper. And that's really what we're here to do, is to try and teach good tactics that you can put to work, regardless of the environment or what any of us, are potentially doing in any one period. Let's see. Magnus is saying participating in the USIC money manager division. I'm up 35% year to date. That's fantastic. I'm being aggressive, obviously, but discipline, risk first focus, getting uncomfortable with things going too well, worrying that the hammer is right around the corner. Can you share your experience in managing emotional and actual capital after good performance? This is a good question. Brandon, love to get your take on this as well. Listen, you always want to know in terms of when things are working really well and getting a feel for, okay, how much risk am I carrying, or being ready to switch from the gas to the brake. So obviously if you're up nicely, 2 months into the year, 35% in 2 months is phenomenal. Okay, how do you make sure that you adjust quickly? The first thing I would say is the minute you start feeling some form of pressure is when you've got to get a little bit more conservative. What I mean by that, though, is okay, you buy a breakout and it stops you out immediately, or you don't get any good pin action on a few buys. You start tempering your exposure because I'm just guessing. You said I've been very aggressive. Well, then you've got to have your head on a swivel and get ready to switch from aggressive to the opposite. You've got to being very conservative, but based upon the action. Don't just go, well, because things are going really well, I've got to stop. You've used the analogy. If they're lobbing you pitches over the middle of the plate, you keep swinging at them. It's when you either start swinging and missing that you go, I got to dial my swing back a little bit. I got to swing a little softer because I'm either not seeing the ball well or things aren't working. So just be ready for once you start feeling pressure or we start seeing signs that, breakouts aren't really working in earnest. We had that reversal 2 weeks ago. We talked about it. I'd say there's been some deterioration, but we still had some trades working. So I don't know, Brandon, and the idea of managing emotions when things are working too. Any thoughts there?
Yeah, so sorry guys, I was in the middle of talking to Bob and Mark on the whole GoDaddy bump. So I didn't really listen too much to Marky's response, and I just found the question. So if I repeat what Marky says, I apologize. But I think this kind of happened to me in 2020 when we were doing really well, and it was I had the emotions of, okay, this can't keep going. Like I want to, it's like you want to just book the gains and just wait, right? And that is like the wrong approach to have because we do not know what the future holds. And that rally went from, I think I was having those thoughts in August, and it went through till February, for us. And it was just like, this is where you got to divorce the feelings from what you're actually seeing. And it sounds so simple to say, but it's not easy to do, where you're just constantly doing the same thing over and over again and adjusting to the feedback you're getting in the market. And I think, for us, even a few weeks ago, I remember it was, I don't know, I think Tuesday where we got stopped on a few names, and then we were kind of on pause. And then it was like Thursday, we got some feedback. Friday, we got follow through, and it was like we were back to the races. So it's like if we would have held the thought process of like, well, we're just going to wait for a bigger pullback instead of actually, continuing to just listen to what the market's telling us, getting, judging the feedback that we were getting in our own portfolio, we would have missed, a lot of the rally we've seen recently. I think February is going to be a pretty decent month for us. So, again, it's try to not have this preconceived notion that the hammer is going to be dropped. Now, could that happen? Of course. But to think that it could, it's going to happen next week or in 2 weeks, we have no idea. And again, this could end in a blow off top. Looking at the IWM here now, I mean, we want to see how it close, how we close here, but who's to say? We could just really go here. Then what are you going to do, right? So yeah, I hope that helps. I did a lot of rambling on there, but again, feelings have nothing to do with it. Is really what you gotta learn, and it's really just the market can continue much longer than anybody thinks, and that's what I've learned over the years too. And I again, like Marky said, we've had these emotions as well, and it's just something that you work through over time.
On every cycle, you trust what you see in front of you more than your feelings. That's for sure.
Exactly. And it's funny, Mark Minervini would say that when we were, I don't know, he all the time you'd say it. And after we went through, another cycle, it was like you saw it, and then another cycle, and now it's like, Mark, you'd hear him say even over the last summer, like how patient we were, because we know what we want to see now to get aggressive. There's no questioning it anymore. Where before it was like, there was a little questioning it. And after each cycle, you question it less. And then your confidence just continues to grow. Didn't mean to cut you off there, Marky.
Oh no,
Sorry.
perfect. I was absolutely right. And I remember, how many times did I say I love it when I hear people asking, does this strategy work anymore? It just tells me it's going to work like a charm at some point. Because the longer you've been doing this, you just realize, your confidence only increases. And, for those of you who think, this doesn't work, or I'm not good at this because you've only been doing it a couple of months, just be patient with yourself. Nobody gets great at anything in just a few months, or even a few years. A couple more here. We're going on an hour. So Matthew's asking about TPG. Bought yesterday at 228 early in the morning when it appeared to have excellent volume and price action. I don't know what you're referring to yesterday's great price action. This would not be, I mean, you must be looking at an intraday or something. I think I was just too eager. Got it at 44.27, stop at 42.50. My question would be, why not wait until it broke out, or at least came through this pivot? If it was yesterday, you didn't really even take out this pivot here. So it looked like, you jumped the gun a little bit, which is you're saying, love your thoughts. Look, if I jump the gun on something, again, I would never buy, I would never buy here. It doesn't make, what are you gaining on a situation like this? Just wait for it to break out. Yeah, you pay up a little bit, but then the stock is on the move. Now, maybe you started a tiny position, expecting it to build out a little bit more. Well, even then, why not just wait for it to break out? Remember, guys, we don't want to be waiting. We want to wait for that train to be coming in on schedule. So it's not doing anything wrong at this point. I just think you diagnosed your own problem in terms of maybe you're someone who wants to jump in early. Well, again, if it doesn't make any sense, what are you gaining in order to do that? And I would argue buying stocks to save 1% before they go through a pivot it's not a money saving deal in the long run, because you're just going to wind up in more situations that either don't go anywhere and then something else does, and now you're in a stock that isn't moving rather than just waiting for them to break out.
When I think too, those two reversals are pretty key. So it's like I would definitely want to wait to buy until we get cleared that level, because those 2 days are telling you there's some selling right there.
Yeah, absolutely. Lance is saying, I realize various parts of this question. Apologize if I'm asking too many details. Okay, it's ultimately up to me to determine my position sizes. I'd like to be between 8 to 12 positions. I'm currently at 15 already due to all the inventory coming to market. I don't know what you mean by that, but with that said, what's our minimum maximum number of portfolio positions? Where are you sitting now? What's the range of sizes in your portfolio? Example, 10%, equivalent to 10 positions ranging from 5 to 25%. My issue is that I'm mostly buying quarter and half positions and now have too many holdings, yet only 50% invested. For example, I took a quarter position in NVIDIA, catapulted higher, and never gave me a chance to build to a full position. On the flip side, there are a fair number of positions that are stopping me out, and I'm not gaining significant traction to go big. Okay, let's start with your last comment. If you're not getting significant traction to get more aggressive, then you're doing it correctly. If you don't get traction in the names you own, you've got to earn the right to play bigger. So if you haven't done that yet, then you stay a little bit more conservative. In terms of what's the number of positions we want to hold? Yeah, I mean, we'd like to be 8 to 10 or even less. Now, some of that depends to be based upon liquidity, for Brandon and I, but everyone's a little bit different. And I mean, look, we've got some members trading, as few as 4 positions. So it's all based upon, the risk that you're comfortable with. Trying to make sure I covered all the. Oh, is there a range of sizes? Sometimes, certainly. Or we have positions that are bigger, but generally, a small position is somewhere between, 5%, 5% would be small. 10-ish on average, and 20 or bigger would be, full to overweight. I don't know. Did I cover all that one, Brandon?
Yeah, I think that's
in terms of maximum number of positions. Ideally we want to be 10 or less to be 100% invested, and then looking to get as concentrated as possible. Now, will we wind up with some partials and things like that as we take part? Yeah, sure. But all things being equal, that's how we think about it. It's not, though. It's not just a perfect, exact math in terms, at least, especially when you consider liquidity. Let's see. Greg saying, was the November, December timeframe what you would consider a first wave of setups? During that time, I was just getting traction, taking short-term profits year to date. My own buys, I've had difficulty trying to swing trade. I'm out of sync, or am I out of sync? Are we in a period in between a first and second wave? I would say, Greg, we've had multiple waves. So the first wave, we didn't really, we had sort of that follow through day in November. We didn't really get a lot of initial setups, a few. And, if you look at, just, I don't like generally doing this, but if you look at it, say maybe an index chart, the first, to me, you got a little bit, maybe like a wave in here, but the better wave, this is when we saw some of those home builders and a lot of these, as the index went sideways here, we had a lot of names, there was sort of a wave of setups that happened. Then we had another subsequent wave up in here. This is really where we went to easy dollar. As the market was going sideways, we started seeing more and more merchandise. So I would say we've had sort of, 2 or 3 waves at this point. Casas is saying, can you explain the Airbnb? Sure, we've talked, about this one. He's saying, feel like there's no base, looks like a megaphone, although I bought it. Well, first of all, if it doesn't meet, if you don't have to buy something just because the platform is buying something. I'm going to be clear about that. Here's your VCP, 1, 2, 3. Look, is it a little bit laggardy? Yes. We talked about this sort of last week where the stock tried to get going, came off, reversed. You caught support here on this low on decent volume. And Brandon, I think we mentioned this last Thursday, didn't we, Brandon? We were actually looking to try and catch it, as it was coming sort of off of these lows, and then it gapped. We didn't get to do that. Probably could have even, and then it's just sort of re-tightened a little bit. So it widened. You're right. It did volatility widen a little bit here? Yeah, but it was on the earnings. You caught support, went to new highs, came back off, and now, we're just sort of trading it through here. And if you measure, this low is really key, in my opinion. Plus, it's taken out the 50. You measure all the way down there. Even with a little bit of that widening, it's still about 8%. And the right side of a bigger base, I think it's a decent risk reward.
But see how it gapped last, was that Thursday or it was Thursday it gapped, right?
It was, yeah.
And now it just went inside that, that day and to the prior day, where the pullback buy was. Like this is a good example of why you just don't chase, because the stock was not ready, and it gave us another pivot that we could buy from. Yes. Is it the same high as, that Thursday? Sure. But we were able to go through some time to let it develop a little bit more instead of buying it and sitting through a pullback. Does that make sense?
A number of more Bitcoin related questions here. Look, guys, I want to be clear about something. This idea, like, this is just another trade. Is it? Yeah. Do we happen to have a decent size on? Yeah, sure. Well, who cares if we might have missed the whole thing? There'll always be more trades. So I don't want anybody, thinking that just because we happen to get that one right, that we're going to override good risk management or turning into some type of, I don't know, Bitcoin perma bulls or whatever. That's not the case at all. Like I've said, I don't care what the asset is. This could be, I don't know, a bubblegum company or whatever. When I see a new issue, like, that's really tight, I'm probably taking a position. Now, the fact that, again, then you stack all these things on top of each other, it just makes me that much more constructive. Someone's asking though specifically, why not be long the underlying versus the ETFs? It's the same thing. This is a 1-to-1 deal. That was what I was trying to make before. But if you look at the Bitcoin chart, and I put that up literally the same time we were buying this, I put the underlying chart up on the X platform. Classic cheat. And then it ripped. And if it hadn't ripped, guess what? I tried it a time or two last year, got stopped out. And this is why you wait for another subsequent 5 point, you get back involved again. And he's asking about if there's an issue with it over the weekend and we have a lot of exposure. I don't know what you mean by we have a lot of exposure. If you have too much exposure and you don't like the fact that the underlying assets, say to this ETF, trades 24/7. Listen, if you have an account where you want to trade, the physical, that's fine. You use the exact same tactics. That's I'll rather than going on a continued rant here. Let's see if I can bring that up for you guys. It's no different.
Timothy, this is why selling into strength to be able to sit with something is so important.
Here's can you seen that, Brandon?
Yep, looks good.
This is the same exact thing. The difference is the IBIT chart starts right here. It's the same thing. Because they're a 1-to-1. One is just an ETF, and this is the underlying physical. Yes, this is wildly extended. We're up, I don't know what it says, at the peak, close to 50% in a couple of weeks. Yeah, classic. And I don't care if I have to hold something for a minute, a day, a year, I'm looking for buy points like this. And then you put this in context of, the trend and where this has been. Here's your stage 2. This is really your first, sort of buyable base. Here's classic cheat, wham, right into new high ground. Giancarlo's saying should it be closer to 60? No, it's a percentage. It's not a dollar. It's not a that's not how it works. Let's do one more. Get rid of this. Good morning. Entered an ad on IWM at 204 with a stop at 195.11. Please rate my buy and discuss what I can do better. Well, as a general rule, I again, we don't like gaps. The IWM did gap a little bit this morning. Look, could you bump it through these highs? I think he's using 195.11. I don't know where you're getting 195.11, maybe sort of undercut of this low. Look, if you want to own the ETF or you want to get aggressive, I would prefer, remember we talked about the more liquid the names, the more we like to try and buy them off the cheats and low cheats. It's just because the breakout to new highs is more obvious and a little bit more, I don't want to say shakeout prone, but if that would be the way we would tend to look at it, where, buying it even sort of coming through here the other day, you're sort of catching it, in anticipation of this breakout. And then you measure, it gets you in a little bit tighter. But listen, was today a potential ad spot? Sure. I think it's more likely this is probably, it might even give you a whole nother, other contraction here or something like this. And if this were to happen, could you bump it or buy it if it comes through? Yeah, you could. So, all right, guys, going on about an hour and 15 here. Sorry we didn't get to everybody's questions. I know there's a lot. Save them for Monday, and we'll be back, in the trading room for Q&A. Mark and myself look for the weekend video and Brandon's stock analysis, and monitor the platform for updates from there.
All right, take care, guys.